So today is March 29th, 2017, and we're analyzing crude futures, looking for an understanding of what should happen next going forward into the future. And as I was just saying a moment ago, these cycles are repeating historically over and over again. Pattern phase 1, phase 2, phase 3, phase 4, and now the next phase 1. The computer is doing the analysis of this energy cycle and telling us in 5 days, and it looks like 8 hours, we're going to have the next phase 1, little green dot. Okay. So down here we're at the phase 4 right now. We're in that cycle. We're in that quarter of the game. And last week in our webinar we talked about what a Canaveral pattern was. And right now there are 5 patterns in our guide to the histogram guidebook. We have the buying pressure pattern, we have the selling pressure pattern, we have the chop pattern, then we have the inverted selling pressure, which ends up becoming a buy signal, and then we have the inverted buying pressure, which becomes a selling pressure signal. Well, there are 2 more. There's the Canaveral for red dots, and then there's the Canaveral for green dots. And again, these are Canaveral. These are patterns that I've been learning since we started up this company, and I learned progressively. A Canaveral pattern is a variation of a 4 or a 5, and currently a Canaveral pattern red is a variation of a pattern 4. So let me get a copy of your guide to the histograms from my Dropbox, and those of you that don't have this book, you're more than welcome to play with it. Where is it? There it is. Guide to the histograms. So it looks like this. I'll share it with everyone here, and there'll be copies in the YouTube video when we post this later today. And a pattern 4 is located about 7/8 of the way through the book. And it looks like this. So a pattern 4 is a signal where when we're expecting selling pressure, we arrive at a new low. And either the candle to the left or the candle to the right is a new low as well. So candle number 1, candle number 2, or candle number 3, either of those can be a new low in relation to the prior swing low. And if any of them are, we assign an exhaustion arrow, a signal indicating that this time may possibly be a reversal time. And when we see that take place on live charts, it historically looks like this. Okay? But occasionally the pattern forms in a slightly different way. The pattern forms in a slightly different way, and it happened here on our daily chart in Crude. And so there are 2 important components of a Canaveral pattern 6. The first one involves a new low candle. So let's go ahead and just type that, new low. I'll call it brand new low. I think that's how I've been referring it. Brand new low. And many times this candle, Derek, will have a wick to it, a large wick, symbolizing that we have touched a very sensitive area, that the banks were just foaming at the mouth, ready to reverse this thing when they got to that price. So first component is a brand new low. And what you need to do when you identify that is, I usually put a gray box around it. And I take note of where the high of that candle was and where the low of that candle was. And I make it dark, almost like a building. In fact, exactly like a building. Now, this phase 4 signal does not have a new low in relation to the low of crude, which was down here. So you'll notice from your guide to the histograms guidebook that the red dot, the candle to the left of it, and the candle to the right of it did not form a new low. So the phase 4 red dot candle here, its low approached the low but never got near it. This candle nowhere near the low, and the third candle of the series did not meet the requirements. However, the second requirement of the Canaveral was met. That is to say, the high and low of the pattern candle, the exact selling pressure candle. Derek, do you see how it fits inside of the high and low of the brand new low candle here? I'm going to give it a different color so it pops out. We'll try, is there a blue? Royal blue. That works. So the royal blue lines, this is very mechanical. There's no interpretation here. There's no wishy-washy discretion. This pattern here of the phase 4 signal, it fits inside of the body of the brand new low. Now, no other method is going to have this technique because it's not based on a predictive pattern. So you can't really equate this to any kind of other pattern, fibs or whatever, volume. You may have overlap, but the prediction part, that's where this comes in. When you have a brand new low, here's the second requirement. And the same thing works in reverse. We'll find them today during the class for the brand new high. Selling pressure signal candle fits inside brand new low candle. When that happens, this is the trigger. Your stop is just below the low of the brand new low. Your stop is just below the low of the brand new low candle. So right here, that would be 46.90 something. Now, you see the candle came all the way down, came all the way up, and it closed. If this was on a 1-minute chart in our live room, I would type the letter CAN and I would put a green triangle underneath it right here. You've seen me do it 100 times by now. The expectation when you see a Canaveral is almost always a homecoming trip to the moving average. The expectation is almost always a homecoming trip to the moving average. In this case, I use a 120 EMA. Your mileage may vary, but for me, a 120 EMA is generally a place where I see this now as a bottoming pattern or a trend reversal. A Canaveral is generally a trend reversal signal when we observe them, at least on the smaller time frames. I don't have much experience with the taller time frames. So had you noticed this and spotted this, and I suspect some traders did, Being long in the market from 47.73, you're up as high as 48.80. So you're almost up $1,000 per contract. Had you noted this predictive Canaveral pattern using this predictive NinjaTrader indicator. Okay? So, at the very least, I expect a challenge of the prior swing high. So by prior swing high, you know what I mean. I hope you know what I mean. That's the last pivot in price that the market put in place, and that was up at $50. So there's essentially $1,500 of open profit right now. And if you look at the risk involved, below the low is $1.80, and right here to the high is $1.50. So it's an inverted risk-reward ratio. If you wanted to, I would strongly encourage you to examine looking at a stop halfway between here and here. So just below 47.62. Historically, when we have those types of time cycle phases, those time cycle predictions, the 50% split between these types of important moves is generally found to be a very important support area. So we shouldn't go below 47.62 before we hit $50. So if you're considering a longer position in CL, then your stop, whoops, use the ruler tool, knucklehead. Your stop would be around $1 to get $1.50. Okay, that's the most aggressive stop that I can recommend you analyze in your own personal discretion. Does that make sense? That pattern that we just talked about, the Canaveral pattern. And so for CL, I'm sort of expecting something like that. But that's not the extent, the full extent of our analysis right now. This is the first of a series of clues that we have in relation to what might happen next. Okay. So far so good on what we're doing. The Canaveral pattern in CL, we're analyzing where crude might go over the next week or two. One of the other things that I want to take note of, we're going to start looking backwards into the past. Okay? And when you have the daily cycle marker tool, you can start to identify what I call constellations. Constellations. Constellations are time patterns in relation to price structure that repeat. Time patterns in relation to price structure that repeat. So Derek, take a look at what just happened here. And I'm going to use a little circle tool. One, two, three, four, five. 1, 2. Apply. Boom, boom. Derek, there was a phase 3 that dropped into a phase 4 in crude. You see that? The phase 3 was higher. The phase 4 was lower. And I'm just going to isolate that little pattern right there. You see what I'm talking about? Now, Derek, watch. I'm going to copy that little circle and I'm going to move it over here. Do you see that? This was a phase 3 followed by a phase 4. And James, do you see what happened at that event? Ernst? This was a phase 3, followed by a phase 4. And do you see what happened there? This was a phase 3, followed by a phase 4. And look at what happened. There is one instance where it didn't do what we were expecting it to do. Over here. Here, we'll pull it out. Lately, this is going back to summer. This is June of last year. There's been one instance where the phase 4 was lower than the phase 3, and Derek, it plunged through. The very next day, it went the opposite direction. See here? The very next day, back in November, it dropped down instead of going up. That's not the pattern. The pattern here, this constellation, is a higher close the next day. And can everyone see that in our current iteration, the higher close in Crude went the other way? And so in relation to all the other patterns, it doesn't match this one. It doesn't match that one. It matches these guys. So we have some guidance now. What do I mean by guidance? I mean, if we look at the low of the phase 4 and how high they went before the next phase 1, it gives us some clue as to how far this move might go. Because I found banks are lazy. They're not imaginative at all whatsoever. And so here's what I mean by that. This candle closed right here, 44.74, and it made it all the way up to here before the next phase 1, this little green dot. Gary, this candle closed and made it all the way up to here before the next phase 1. This candle closed and made it all the way up to here by that phase 1. You see what I'm doing here? We're going shopping. We're harvesting. Now I'm going to take that first orange line, I'm going to copy and paste it over and put it on the low of our phase 4 dot over here. I'm going to copy and paste our second orange line. I'm going to put it right next to the first one so that their lows are the same. And then I'm going to take this crazy one and I'm going to put it over here next to the three of them. So when I do that, when I use this pattern technique, there are almost always several lines that are within a range of each other. And Gary, these two, the first two, are within 68, 70 to 40. They're within 70 ticks of each other. And I'm going to throw the third one out, the outlier. So if the banks do what we're expecting them to do, if they do what they've done in the past at this time-based pattern, there's a really good chance that we should pull back based off of the Canaveral pattern now and based off of these three iterations, these three constellations. Call it the Fishhook pattern. I don't know. You can almost see visually down, up. There's a fishhook, right? Down, up. There's a fishhook. Down, or check mark. You call it the check mark pattern, the fishhook pattern, whatever you would look up into the sky at night and say, that looks like a fishhook. I'm going to call it a fishing hook pattern. Hey, everybody, come look at the fishhook pattern. Don't look at Orion. Look at this one. It's a fishhook. That was a little over the top, but so be it. So that's the second indication that we're on a very fast ascent towards the moving average again, or the middle of the range. Everybody good with that so far? Okay. Now the third thing we're going to look at is seasonality. Seasonality? Seasonality. I want to leave that chart with the lines, with the circles on it, so you can go back and review that in my workspace. And we'll add the same indicators. FLUX daily cycle markers and the FLUX moving average. Now, when I refer to seasonality, what we've been uncovering so far is that there are patterns related to seasons. And we're currently here in a March-April window. We're in a March-April window. And I want to see what's happened in preceding Marches and Aprils. So I'm going to go back and look there. Okay. Derek, do you see anything similar in this March-April window of last year taking place right now in relation to what's taking place right now? This is March-April of 2016, a year ago. Any fishhooks? Any checkmark constellations? Phase 3. Whoops, a little too big. Size does matter when you're doing this. Phase 3. Phase 4. And what's happening? Well, phase 4 a year ago, it matched the fishhook pattern that we just talked about. The very next day, it closed higher. It did not close lower. And so, while this was not a Canaveral pattern, by one day it missed the Canaveral pattern, Gary. This brand new low was down here. It did move up. How far? It moved all the way up to its moving average. We were below the moving average in 2016. How far below were we? We were at the low. We were $6.71 below. Currently, the low below the moving average was right here, and it was $6, $5.50. You think that's a coincidence? Okay, now visually, look at the pattern. It moved down below the MA, pulled up, dropped down, and then started coming up. Look at the right-hand side. This is a year later. It came down below the moving average, pulled up, dropped down, and then started moving up. Okay? So this is the third layer of the analysis. We started looking at the pattern itself, the Canaveral pattern. Then we started looking at the pattern in relation to the constellations of what usually happens. And now we're looking at the seasonality of that pattern. And in 2016, March to April, we had a nearly identical price pattern taking place with a return back to the MA. So the move in the past from the low before the phase 1 was a $7 move. Okay, well, how far is $7 here? Well, from the low up, there's 6. 7 is here. Does everybody notice that the geometry is kind of lining up? So Gary, I'm going to put a rectangle right here, and I'm going to put it on all CL charts. And now I'm going to go back and look at that chart we did with the constellations just a second ago. And so Gary, if we look at what happened last year, there are 2 lines now that made it this high. There's the one that I threw out, remember? This is the line that I threw out. And this is the one that we just got from 2016. And so now we have 2 zones, don't we? One is very narrow. And you'll start to see these confluence points. You'll start to see these confluence points now, where stuff like this, the geometry of it all starts to add up. Okay. So all of a sudden, this little $1.50 swing here doesn't seem very large, does it? Now, that's 2016. We can go back and see if there was anything relevant 2 years ago at 2015. There may not be. Or, Derek, there may be. If you swear, if you partake in the occasional swear word, this would be a great time to do a holy blankety blank. Because now, Gary, look at March, April 2 years ago. Does anybody see any similarities? Well, first thing, we have a fishhook pattern, don't we? It's a fishhook! Look, everybody, it's a fishhook pattern! Okay, we have that 2 years ago, same time of year. Second thing, Johnny, watch the pattern in price. Remember that geometry I just told you about? Down, up, down, up, up, up. Okay, we're nowhere near the moving average here, but the geometry of that ABC pattern into the lower low is identical to 2016 and 2017. The third thing is a Canaveral pattern. We just talked about the definition of a Canaveral pattern when we started. John, do you see the brand new low right here? Let's go through the definition again. Brand new low. Brand new low. What do? We surround that candle with a drawing. Put the rectangle right here. Second thing, does the selling pressure candle fit inside the brand new low candle? There's the height of the building, Derek, and there's the base of the building. Does this signal fit inside of the brand new low, high and low? I want everyone in the sound of my voice, YouTube, wherever, you guys forward this video to your friends later. And that, my friends, is a selling pressure signal inside of a brand new low. This is 2 years ago at the same time. And that is an exact match to the pattern that we're seeing right now, which is a Canaveral. So 2 years ago, we had a fishhook pattern. 2 years ago, we had the geometry of the down, up, down, new low pattern. And 2 years ago, we had a Canaveral. What are the odds of these things happening over and over and over again? Very unlikely. There is nothing random about the markets. How far did it go? Pretty far. From the low, it went up $8.6. Before the phase one. Before the phase one. $8.6 is how far from the low? That's only 3. Oh my God! We are bullish into the phase one using 2 years worth of signals. This is 2015. 2015. The same pattern occurred last year in 2016. And the same pattern is occurring right now in 2017. So, when you take it all in perspective, it's easy to see that the same patterns I'm teaching you on the lower time frames occur at the larger time frames as well. So I'm expecting CL to move higher in the next 5 calendar days. What is our plan B? Johnny, how do we know if this whole thing goes to hell in a handbasket? What would be the end to this pattern? What would destroy 2 years worth of signals, a year worth of constellations, break the lower low? If it breaks the lower low, good night. Go out and buy a Cadillac Escalade. Go out and buy a gas guzzling, hell, buy a tractor trailer and drive your kids to school in it, because gas is going to be $30 a gallon, rather crude. It's just going to fall and break that low and go forever. This pattern has no break in the last 2 years. It has no break in the last year. If the fishhook pattern, if this geometry, if the Canaveral, if the last 2 years of the spring pattern are correct. That is the shake the Etch-a-Sketch moment where it's over. It's over, Johnny. It's over. Hey, Drew First Blood. Hey. So that's everything I know about crude in terms of a daily bar analysis, and what I'm expecting is minimally, I'm expecting us back up to the $52 mark here in the next 5 calendar days.